Hey everybody, this is the monthly top-down analysis of the Forex market for the month of August. Let's have a look here, starting with the euro-dollar weekly and monthly chart. We've got here the break lower of this tight trading range, and then the break to the top outside of this trading range. Both breakouts are highly political. The break lower was the US election, Trump, and the break higher was the announcement of the tariffs, global tariffs, beginning of April. So the market is, the dollar market is quite political. It could go both ways, right? It could move higher to the next level, important level, or it could break back into the range and even break to the downside. I believe we're seeing a stronger dollar over the next couple of months. That would mean that we're actually breaking a lower into the range. Why? Well, we can see that later looking at other US dollar currency pairs. And let's have a look now at the euro yen. So the yen in general looks very strong against the crosses, especially against the weak currency. And the yen remains to be weak, and that's a very bullish chart. We've got a stop run level here, and we've got a stop run level, well, that's the same one, right? We've got a stop run level here, and our target, well, is above that. When it produces a stop run move, well, we'll get there and even spike the target. The euro is strong, but the Swiss is even stronger. We've got an S2 pattern here. We're basically sideways, right? The euro and the dollar is balanced, in balance. But being in a downtrend, well, once we cross this threshold or a flat line, we should see that the Swiss is getting stronger even against a very strong euro. So look at a few other euro cross pairs. The euro is strong against the CAD. The euro CAD is at an important level just here to produce a spike higher, a stop run move. If you look at the euro against the Australian dollar, again, there's a lot of bullishness in the chart. This is an S1 pattern long. This is an S1 pattern long, working its way higher. These are the target areas and stop run levels that was marked by the corona pandemic back in March 2000. And there's a lot of more room to go, so more bullishness. Why should the euro be bullish? Well, I don't know. Maybe it's pointing to the end of the Ukraine war, which should pour money back into the euro zone. Why should the Swiss franc be stronger than the euro? I don't know. It looks like some geopolitical tension coming up. Let's have a look now at other US pairs. Why could the dollar get stronger over the next couple of months? Well, you can nicely see it here on this odd US monthly chart. We have pulled back into the moving average. It was basically a technical reaction, as we've seen several times, and we could see now another leg lower. Well, this chart moving lower means the dollar gets stronger, and that acts as a magnet level again. This is a Corona spike bar, March 2000. Let's have a look at some other US pairs. Let's have a look at the US, for example, US CAD. Very same thing, right? If this price goes up, that means the dollar gets stronger, and we are pushing here. We've got a nice pullback into the 21, and we could easily have a technical reaction higher. This is overall bullish. We had an S1 pattern here, and the target is up here. So I'm expecting more bullishness for the dollar to come in. But the interesting part is, how should it do against the Swiss franc? Well, if you look at the monthly US Swiss, well, that's clearly bearish. We should actually see how the Swiss remains the strong currencies of all. Stronger than the euro, stronger than the US dollar, well, the strongest of all of them. And if the Swissy looks strong against already strong currencies, well, it looks even stronger against the weak ones. Well, let's have a look now. Yen, right? Yen is the weak currency. And if we have a look at, for example, pound yen, we can see this chart looks very bullish, right? That's true for all other yen charts. It looks like the yen continues its several year-long weakness, as we can see here on the chart. Now let's have a look at a few Swiss charts. Swiss is bullish against all currencies, right? Against the Australian dollar, very bullish. We've just taken out that level. It has produced a small move. Well, there should be more to come. The stop run move is bigger than just this technical reaction. And we've got this one here, the CAD Swiss, again, very bearish chart, right? Which shows Swiss franc bullishness. Now let's have a look at the last currency. It's kind of an exotic pair, US dollar versus Singapore dollar. The Singapore dollar has been in a sideways range. It's actually a turnaround. Formation, price formation with several tops and lower highs. So this should actually turn around. And if it does, it can produce a big move. We have stop run levels aligned here, so look out for Singapore dollar strength coming in over the next months and years.